the December event for Engineers Ireland Energy, Environment and Climate Action Division. It's great to have so many people attending the webinars, and it's a good distraction for us all, I guess, in these strange times which are going on longer than we all would have hoped, I guess. Tonight's event is called the Carbon Budgets for Essential Climate Targets, Financial and Educational Implications. And I guess this is an aspect where finance meets engineering and the climate action legislation. So the rubber is hitting the road at the moment in Ireland in terms of making things happen for our 2030 targets. And carbon budgets are a key element of that. They are going to limit the aggregate emissions over fixed periods of time, up to 15 years in advance. And these are going to have massive implications in terms of government policies and economic activities over the coming years. So we're very fortunate to have two really eminent speakers with us tonight, both actually members of our division committee. We'll start with Professor Barry McMullin, who is an electrical engineer by background from UCD. He also has a PhD in computer science, and he's had a really diverse academic career, currently in DCU, where he was the Executive Dean of Engineering Computing from 2013 to 2017. And I guess in more recent years, he's really turned his focus to the big picture questions in relation to climate change. So great to have Barry with us tonight. And then we will also have Gerry speaking, Gerry Duggan, who is a Chartered Engineer, Fellow of Engineers Ireland and the Irish Academy of Engineers, with over 45 years of experience in, again, a very diverse range of industries in both energy and transport. He was one of the directors in Iarnród Éireann for 11 years, member of the Light Rail Advisory and Action Group, and he was a founding member and former chair of this division within Engineers Ireland. So a great depth of experience and knowledge to draw from our speakers tonight. So to start, I will hand over to Barry to kick things off in terms of the proposed carbon budget framework. Over to you, Barry.
Thanks a million, Bernice. I've just hopefully shared screen. If you give me a thumbs up there, Bernice, if you can see it all right.
Yes, yeah, excellent. Good to go.
Good to go. Okay, so I'm going to say this is a two-hander between myself and Gerry. I'm going to go first and talk about the role, what are carbon budgets? What's the concept behind carbon budgets, and the role it can potentially play in governance. And I'll give the sort of caveat at the very start that carbon budgets are a tool, but you have to use them. In and of themselves, they don't actually do anything. In and of themselves, adopting carbon budgets don't actually reduce any emissions or do any good for the climate. So they have a potential role in structuring governance of climate action, but they only work if they're incorporated into a system that brings forth effective climate action. So there's an awful lot of devils in those details. Okay, it's a topical issue. As Bernice referred to, there's a new climate action law has been drafted, is currently in discussion in Oireachtas committee, and the draft version of that has been released, or was released earlier in the summer. This is the blurb from gov.ie when it was originally launched. They've got a number of points that they highlighted that this bill was proposing to address, but central to it is putting our 2050 climate target in law, and I will come back to that, what exactly that means. But secondly, carbon budgets, establishing carbon budgets, including provision for setting sectoral targets. So carbon budgets are one of the central proposed elements in this new bill, so it is topical to try and understand what's going on there. I will lift this quote from the chair of the Climate Change Advisory Council, John Fitzgerald, Professor John Fitzgerald, commenting on this. He says, the scale of effort required to bring in Ireland's first climate budget should not be underestimated if it is to be fit for purpose and actually begin a process of decarbonising Ireland. So this is an important topic, but it's a non-trivial topic. There is some significant complexity, devils in the details behind this. So when we're talking about carbon budgets, we're talking about cumulative budgets over periods of time. And this is a different concept to the one that we're most familiar with when we talk about greenhouse gas emissions and greenhouse gas emissions targets. What we're used to talking about is annual emissions of different greenhouse gases, what their levels are compared to previous years, and we track that, and it should be on a pathway with certain levels of reductions or whatever. So we've had quite long experience now of speaking of targets in those terms and managing climate action in relation to that kind of idea of hitting some kind of annual emissions targets. But actually in the background, we've already been dealing with cumulative carbon budgets, and cumulative carbon budgets basically add up those annual amounts over some period of time. And that has been acting in the background at EU policy level for 10 years now in both the emissions trading scheme and in the effort sharing directive. So in fact, while it hasn't been part of the popular discourse at Europe level, this in a certain form, carbon budgets have already been used at policy level. But here we're talking about the potential role in national policy, separate but aligned with European policy. And the motivation really comes down to the basic physical science of CO2 in particular and how it affects the climate. And I was just starting to prepare this talk on Monday this week, and this paper, new paper, so this is absolutely hot off the press. This appeared in Nature Geoscience as a perspective just this week. Opportunities and challenges in using remaining carbon budgets to guide climate policy. It's an excellent paper by all the key international scientists who are involved in this work, and it provides a really bang up-to-date summary of the underlying scientific rationale and understanding for doing this, which I'm not going to be able to give you all of. You'll be amazed to hear. So I'm going to give you a very quick skim, but there's one core concept, which is that long-term global temperature increase, the thing that's driving climate change, is itself driven by the total cumulative amount of CO2. CO2 is what we call a stock pollutant that accumulates in the atmosphere. The more we release, the more accumulates in the atmosphere, the hotter the planet gets. That's when you strip away all the complexities, that's the underlying physics. And it can be represented in this graph. The graph looks very busy, but I want you to focus on this thick, black, straight line. And it's very unusual in complex system science that we ever actually find something that is a linear relation, that is a properly linear relationship. A lot of things have to sort of work out. Interacting factors have to cancel out in various ways to wind up with a linear relationship. But this is a graph of effectively temperature change relative to cumulative CO2 emissions. The TCRE labeling that, it stands for Transient Climate Response to Cumulative CO2 Emissions. And what's become clear in the last really 10 years since the IPCC Assessment Report 4 is this is a very robust relationship. Cumulative CO2 emissions, regardless of the timing, regardless of what year they get emitted in, what's really going to determine how warm it gets is how much CO2 in total we release. And as long as we keep releasing more, it keeps on accumulating and the temperature will keep going up. So if we ever want to limit the temperature, at some point, we have to stop releasing CO2, net CO2. The human contribution has to go to zero. Hence the discussion of net zero. But net zero only tells you you're going to stop somewhere. Net zero doesn't tell you where you're going to stop. And the key is, where are you going to stop? How warm is it going to get when you stop? Or if you go too far, are you going to be able to go back down to a cumulative amount that corresponds to a safe temperature increase? Now, all these other lines basically tell you that the full story is a lot more complex than that. And I'm not giving you the full story, but I do, we'll make the slides available for anybody who wants them afterwards. And there's embedded links in the slides deck, but I would encourage people to look up that paper and try to understand some of these other complications. But that linear relationship is fundamental to everything. So under the Paris Agreement that you're all familiar with, the Paris Agreement tries to set up a global framework of governance of climate action. And in particular, it adopts an agreement for this temperature limit. Under the Paris Agreement, the parties to that agreement have agreed to definitely limit global temperature rise, human-caused temperature rise, to well below 2 degrees over pre-industrial levels, plus 2 degrees. We're already at about 1.1 degrees. So the definite commitment is to well below, and to make efforts, good faith efforts, to a lower limit of 1.5. And this is based on the scientific understanding of the risks that arise at different levels of temperature rise. And even between 1.5 degrees and 2 degrees, the risks increase very drastically of very severe disruptions to human systems, but to wider geophysical and ecological systems on a planetary basis. The risks are very high already at 1.1 degrees. We're already outside the so-called Holocene, the stable climate regime in which all of human history, all of recorded human history has taken place in this extraordinarily and unusual stable climate regime. We're already at a warmer temperature than that. Under the Paris framework, it's a bottom-up framework. It's not a top-down framework. Basically, every individual party is committed to declaring its own nationally determined contribution to meeting this shared goal. And to do so on a basis of science, the physical science that I've just described, and of equity, on fairness on a global basis. So the acid test is, do the nationally determined contributions add up in CO2 budget terms? If you add up the CO2 amount that would be applied, the cumulative amount that would be applied by each individual party's NDC, is that less than is available? So in effect, the Paris Agreement framework invites the parties to say how much of the global carbon budget they intend to use before they stop, which would allow establishing whether we're actually collectively going to respect these temperature limits. Now, at the moment, the preliminary NDCs that were originally submitted in 2015 definitely do not add up in this way. Now they're actually expressed in very different ways, and it's not easy to figure out how they add up, but the best estimates suggest that we're on track for at least 3 degrees, maybe much higher on the basis of the current NDCs. So there's a problem there. But the basic idea is that either explicitly or implicitly, these nationally determined contributions effectively imply for each party how much further CO2, what quota, what bottom-up claim or annexation of the global carbon budget that they're going to take up. And I'm going to call that here a national cumulative CO2 quota. And basically, you know, we're all engineers, so we're not afraid of having something slightly mathematical. So at a global level, the sum of those NCQs, it's a number, should add up to less than the global budget for a given temperature rise. And based on starting, I mean, obviously we're continuing to emit carbon dioxide on an annual basis, so the remaining global budget is declining year on year. So you have to pick a year, a baseline year. I'm suggesting 2015, since that's the year of the Paris Agreement. But for this framework to work, you have to reference everything to some specific year. You also have to consider how to, you know, if there is overshoot of that budget relative to the temperature goals, what you're going to do about that, how you're going to manage that there is uncertainty. I mean, I showed you that straight line, but that actually is a gross simplification. There are significant uncertainties in that straight line relationship. How do you manage the risk? How do you manage intergenerational justice? If we fall short now, the implications kick in. It's very hard to remove CO2 from the atmosphere once it's there, or from the global carbon cycle. It's very hard to pull it back out again. But there is this time lag between releasing it and the effects working their way through the global geophysical system. So there are challenges to intergenerational justice in all of this. And climate change is not the only planetary system boundary that human activities are threatening. Fresh water, the nitrogen cycle, biodiversity loss. There are multiple other planetary boundaries that human activities are now bringing us into very risky regimes. Ocean acidification is another one that is closely linked with the CO2 problem as well. So all of those things really need to be taken into consideration. But okay, so if you want to apply this governance framework at a national level, all you have to do is at national level, decide collectively how much risk appetite you're willing to accept. And we're dealing here with what's called radical uncertainty. It's not just a probability curve. We don't even know how uncertain things are. We can't attach hard and fast, well-characterized probabilities. So dealing with risk in that context is challenging. We're committed to implementing action on the basis of global equity and justice. So, you know, but it's a bottom-up process. So what's our national view on a fair share? And intergenerational justice. How much of the burden of this are we willing to risk passing on to our children rather than taking the burden on ourselves? But if you did all that, then you could come up with a number. And I with colleagues have done this, researchers at MARI have done this, other people in other parts of the world have done it for other countries. That there are well-established approaches now for coming up with this quota, but to emphasize, this is a forever quota. As they say, once it's gone, it's gone. If you overshoot it, you then have to try and remove carbon dioxide from the atmosphere again. You could put that into legislation as a national climate objective. You could set limits. If you think you're going to overshoot that, you could at least set limits to how much overshoot you might tolerate and how long, because this is essentially an IOU for future carbon dioxide removal. But having adopted an NCQ, an overall forever budget, you would then distribute that over time and over sectors. And that's what we would call a carbon budget program. That's to say you divvy that national forever quota up and say, well, in this year we'll do this, we'll use this much, and this year we'll use this much, and this year we'll use this much. And this is how it'll get allocated across sectors. That would be the way you would turn this into a governance framework, potentially. But that distribution of component carbon budgets would have to add up to less than the total NCQ within whatever overshoot or carbon dioxide removal constraints you've adopted. So again, at the risk of being slightly mathematical, if these sort of carbon budget components for, say, a fixed period of time, for example, 5 years, and for a single sector, if you sum those over all sectors and then sum them over all time, and I do mean all time there, forever, that needs to add up to less than your agreed national carbon quota. And then, of course, having adopted a carbon budget program, you have to put in place mechanisms that will actually ensure that it will be directed, that the activities you do will keep emissions within that cumulative quota. There are lots of details, of course, I'm skipping over them. You would have to consider, you know, you plan carbon budget components for, you know, a 5-year period for a particular sector, but that sector might have a surplus. It mightn't use up all its carbon budget, or it might have a deficit. It might use more. So you need governance to deal with how you reallocate surpluses or deficits. You have to, I mean, I find carbon dioxide, it is the single most important, but warming is not simply a product of carbon dioxide emissions. So you have to bring other greenhouse gases into scope. And to actually integrate non-carbon, well, some other gases can be easily integrated into this cumulative budget framework. So nitrous oxide, certain other long-lived gases can easily be incorporated into this framework, but short-lived gases are more difficult. In the Irish, well, the most important short-lived gas that we're talking about here is methane. And just in case people are wondering, we do have a big issue with methane emissions in Ireland, mainly from our agricultural sector as opposed to fossil fuel sources. But just because methane comes from agricultural sources does not mean that it's somehow magically benign. These green things are links, again, after the talk. If people want a copy of the slides and follow the links, you're welcome to do so. There's this issue of emissions within your national territory versus emissions associated with things you import. That's a difficult, at the moment, all global carbon governance works on a basis of accounting responsibility purely based on the territory in which the gas is released to atmosphere. There have been arguments recently in this country that we are badly served by that. And, you know, I think those arguments, it's reasonable to surface them and discuss them, but there are pros and cons there. And it's actually very complex and difficult to have a robust governance arrangement based on consumption emissions, although, you know, there is some merit in the idea. International aviation and shipping currently falls outside territorial emissions for all national emissions reporting, well, emissions governance at least, but they still affect the atmosphere, of course. So if you're going to have effective international governance within an international carbon budget framework, you need to bring international aviation and shipping somehow into that. And it's still a global commons problem. So even if you do carbon budget governance at a national level, that has to somehow be correctly incorporated so that it interacts with regional, in our case, EU level and global level action. And people have to agree to it. Taking effective climate action at this stage in the game, because we've left it so late, it's going to be painful. And the carbon budget framework gives us a way to explain more clearly just how large the challenge is. But at the end of the day, we'll only succeed in doing this if people, you know, the wider society understands and is engaged and is willing to go along with it and is satisfied that the proposed actions are fair locally and globally. And so it's not just a technical problem. We could talk about the technicalities, the technocratic technicalities of carbon budgets as long as we like, but unless people are satisfied that A, we need to do this, and B, that this is a sensible and just way of doing it, then it's not going to actually work. Okay, sorry, that shouldn't have happened. Let me go back here. Just clicked in the wrong place there. I want to give a quick mention for what this might conceivably look like in action. And again, this is a short paper that I did with colleagues John Sweeney and Paul Price in the summertime, just on the basis of some things that were mentioned in the Programme for Government. So the Programme for Government made a commitment that the incoming government would achieve an average 7% per annum emissions reduction over the year 2021 to 2030. And that's, as it were, a pre-carbon budget governance framework of thinking about things. It's focusing on annual emissions. But in the draft legislation, they're now saying we should adopt a carbon budget framework. So we need to see how you would interpret that target in a budget framework. And the only meaningful way, well, unless I'm open to anybody who thinks there's a different way of interpreting it, but the only meaningful way we were able to see is that you have to translate that 7% per annum compounding every year for the 10 years. You have to see what that adds up to in cumulative terms of the 10 years. And that's what average means, but that's your commitment. You're actually, there's a coded in saying we'll reduce emissions at 7% per annum. That's a coded commitment to a certain carbon budget for that 10 years. That would correspond to a constant 7% every year. And, you know, as I say, our view is that's the only because that's the only way to link this directly to temperature rise, to limiting temperature rise. We don't think there's any other meaningful way of translating that commitment in the Programme for Government into a carbon budget framework. But this has big implications that are not necessarily fully understood. So for specifically, a constant 7% per annum pathway would result in an aggregate reduction of 51%, a hugely challenging reduction in annual emissions by 2030. But it doesn't follow from that every pathway that gets you to 51% reduction in 2030 is equivalent. They're not. Many pathways that reach 51% in 10 years' time might release less or might release more cumulative carbon dioxide over that period. So we actually have to examine that. And again, it's only the cumulative budget interpretation that gives you a hard limit on climate impact. And in particular, sorry, I should have emphasized that last point. In particular, any early shortfall in achieving the 7% year-on-year reduction would imply deeper reductions later in your budget period. And that's the key implication of a cumulative carbon budget program. So here is just to give you an example. So we had the Climate Action Plan of 2019. That's the sort of trajectory that plan was putting us on to 2030. The program for government, 7% per year, if you actually followed exactly 7% per year, you would follow an annual emissions trajectory, something like that. But it's going to take time to get onto that trajectory. So what if, for example, it took us the first 5 years, we did the first 5 years still on the 2019 Carbon Action Plan trajectory. And then we were going to satisfy the program for government requirement only in the second 5 years. Well, the problem is that in the cumulative carbon budget framework, what we're limiting is the area under this curve. So the program for government commitment is to limit the area to the area under this curve. But if we overshoot that in the first 5 years, we now have to undershoot it in the remaining years. We have to get that area recovered. And that would actually mean if we left it all to do in the second 5 years, then by 2030, annual emissions would have had to fall by 83% relative to 2020. Okay, so delay is fatal. But this is the great thing about the cumulative budget framework, is that it focuses attention on that. Okay, what I want to finish by talking about the legislation briefly. Sorry, this is what happens when I click too quickly. Apologies for that. So legislating for carbon budgets. So as I say, that the draft legislation is under pre-legislative scrutiny in the Joint Directors Committee on climate action. They invited submissions from various people, including myself. So I was asked to actually make a submission to the Joint Directors Committee specifically about the carbon budgeting aspects of it. So I'm going to just give you a rant, and I'm just explaining that this is a rant. This is my reaction to the draft legislation on these topics in particular. So in the current draft bill, the Paris Agreement temperature goals are only obliquely referred to. There's a long list of matters to have regard to, and they're in there, but they're just one in a long list, rather than being the very essence and test of the point of why we're taking climate action and how quick it needs to be. So I actually recommend, I don't know if they'll pay any attention, but I recommend that they should reformulate the national climate objective, remove, as I said earlier, net zero is not the point. The point is how much cumulative emissions there are by the time you get to net zero. So net zero in itself by some date is not the point. What we should have is a commitment to meet a fair share contribution to the temperature goals. That would dictate a global carbon budget, and in turn, by applying equity and justice, we could derive a national carbon quota from that. Secondly, the draft bill says the Climate Change Advisory Council would propose a rolling 15-year carbon budget program. So it would be limited in time to a 15-year rolling program, looking 15 years ahead, that would be divided into 3 5-year carbon budget components. That's what I mentioned earlier, carbon budget components. But there's no clear basis in the draft act that would guide the Advisory Council in proposing how big those budgets should be or how small they would be. And in my view, this is a quote from myself, the advisory task under the current legislation would be at best arbitrary, just whatever they think themselves, and at worst utterly ineffective because they don't know what the criteria should be. So again, I recommend to reformulate the objective to incorporate the Paris temperature goals and specify that that's what the Council should rely on. The ultimate overriding criterion for setting this rolling carbon budget program should be this requirement to add up to a national contribution to meeting the global constraint. Finally, in the draft bill, it proposes a rolling, with an annual update, 10-year climate action plan. So at any given time, we'd have a 10-year plan for actions in terms of climate change mitigation. And that would set sectoral decarbonisation target ranges. Now, it's actually, the draft bill doesn't offer any clear definition of what it means by the phrase sectoral decarbonisation target range. So it's conceptually obscure. But in any case, it's not explicitly. So they set up this whole framework of carbon budgets and establishing carbon budgets and rolling into the future and amending them and adjusting them. But it doesn't say that these sectoral decarbonisation target ranges are explicitly bound to that program in some way. So I recommended to abandon, I mean, this, as I say, this term isn't even well defined, and I don't think it serves any useful governance purpose. What you want is sectoral allocations of the relevant overall carbon budget, subject, of course, to this hard arithmetic constraint that the sectoral allocations have to sum to no more than the budget. And again, for the engineers in the room, this is the equation. So if you're going to adopt a carbon budgeting governance framework, this is what it comes down to. You have 5-year sprints. There's an overall national budget for the 5-year sprint. Those are allocated among sectors. So you've got 5-year chunks for different sectors. So that's a carbon budget for a time period for a sector. If you sum those across all sectors and across all time, that should be determined to be within what we've agreed on a bottom-up basis under the Paris Agreement is our allowable national carbon quota. Okay, that was the end of my rant. Okay, that was a real whistle-stop tour. As I say, if people want to follow up on any of this, I will share the slides for anybody who wants afterwards. Just drop me an email or whatever. We will have a Q&A session, obviously, shortly, but you'll get all those links to the component things. And with that, I'm going to hand over to Gerry, who's going to talk us through, I think, the richer implications for actually trying to do any of this in action.
Barry, thank you very much. Now, thanks, Sinead. Effectively, Barry has set out for us what we need to do. What I'm looking at is what we may do with the resources we have available. And this, unfortunately, is a significant challenge. So if we move to the next slide, please. Effectively, the foundation of this presentation is based on 2 reports prepared by the Irish Academy of Engineering. The one on the right was prepared in 2013. And what we looked at there was trying to identify new or solutions that hadn't been identified in any of the government type publications before. And in the publication on the left there, what we tried to do is to quantify how much it would cost to meet the 7% target, or sorry, the 30% reduction target that was then the basis of government policy. Because unfortunately, while there's a lot of analysis done, very few people have come up with hard numbers as to what the costs are involved. So if we move to the next one, please, Sinead. Effectively, okay, electricity investment requirements to achieve the 70% target. And this 70% target was developed somewhat independently of the current government plan for 7%, but it's in place. And effectively, what we're talking about is a very substantial amount of incremental wind, 7,500 megawatts of additional wind power, and a certain number of other technologies. Now, the total cost involved is 21.2 billion to reach, that's the investment requirements to reach that. And that excludes the network reinforcement costs. Now, the good news in some respects is that in fact, this area is eminently fundable now. There is substantial equity capital available for renewable energy projects, particularly projects of scale. And equally well, there is very low debt financing available. So it's reasonable to say that while the sum here at 21 billion is extremely large, it's also probably capable of being funded. Now, I would point out I have some reservations in relation to the 2,200 megawatt battery installation proposed by Mari. I understand that there is in fact intense interest in this sector by private investors at the moment because the returns being promised under the DS3 are extremely large. In reality, Ireland needs 500 megawatts of battery for actual short-term system support reasons which are unavoidable. But how longer term storage should be handled, I think needs further investigation. If we move on and we move away from the electricity sector at this stage, because I think the greater challenge is in the what's called the non-emissions traded sector. And here, okay, first up is agriculture, a major chunk, etc. And this is analysis, while it was prepared before Chagas came out with the report, it is consistent with it. And there is the potential for a net reduction in agricultural emissions of 25% by 2030 at a cost of less than about 50 euros a tonne of carbon emitted. Unfortunately, the transport sector, in our view, is demonstrating very little scope for reduction in emissions. Commercial transport tends to move almost directly in tandem with GNP growth, real GNP growth now. And effectively, we are still projecting a high level of GNP growth. And as the Director General of the International Energy Agency pointed out recently, last year, worldwide, 3% of new cars were pure electric, battery electric vehicles, but over 40% of them were SUVs. So while we're making some progress in some areas, it is clear that worldwide we are moving to a higher emission transport area. Again, you can see quite significant targets set up there for commercial, public sector, residential. And these are challenging, and we'll come on to that. So if we move on to the next slide. And we're looking here at what are the investment requirements to meet the targets we've put forward. And even there, public transport, and we've only taken 33% of the investment requirements to 2030. You're talking about 3 billion. Subsidies for battery electric vehicles. Now you might argue that this is going to have to go down, but we'll see about that. Extending the gas grid, we think this is useful. There are various other things there. But effectively, I identified there, back in 2013, we proposed the installation of 300,000 heat pumps in rural houses. And at that stage, that was on nobody's radar. It's become mainstream since then, but I will come back to it because there are challenges now that weren't there in 2013. Shallow retrofits, these are achievable. The deep retrofits of 300,000 houses, these are significantly challenging. And indeed, I would add that in the case of both heat pumps and a deep retrofit, our per unit figures are nearly 50% or nearly 33% below the figures now being proposed. So if we look, and if we were to say and we've lost, at least on my slide, we've lost the bottom there, you're looking at a total capex of nearly 25 billion. Now, if we say, how could that be funded? And we say, if we are to say, it should all be funded by carbon taxes, what are the implications? Let's look at the next slide. And effectively, if we're to fund 25 billion from carbon taxes between now and 2030, and we look at the CO2 emissions targets, and the cumulative CO2 emissions, a bit like Barry's thing, required investment reduction 24.5 million. You're looking at having to impose a carbon tax of in excess of 100 euros per tonne from now through to 2030, if you are to fund the measures proposed in the previous slide. I leave it to you to figure out what the political acceptability of that would be. But if we don't do that, where is the money going to come from? So if we move to the next slide. Where we look at funding the carbon taxes, what it would imply on the individual fuels. So you're looking at the transport side, because we already have a high level of taxation on transport fuels. The increase is, okay, 20 to 25%. And given the way transport fuel prices have moved, this is probably tolerable. okay, peat briquettes are put in here, but obviously they're disappearing with Portamona's move away from energy peat. If we now look at gasoil and kerosene, two fuels that are, you know, much more widely used in Ireland than used anywhere else in Europe, where natural gas is the dominant source of heating in the domestic sector, we can see you're looking to achieve the level of funding we put out earlier. You're having to increase the cost of those fuels by 50 to 60%. That isn't the area of the painful. And equally well, in natural gas, because okay, it's a higher cost, the percentage increase is lower. But there are two elements to be looked at here. One is how much we have to put in carbon taxes to actually generate the finance to permit the investment or to facilitate the investment. And the second is, people would say, and particularly economists are very happy to say, carbon taxes are the way to go because they reduce demand and they provide money and they're very equitable, etc. But if we look at what the impact or the likely impact of increasing carbon taxes is on demand, I think it's revealing. So if we go to the next slide. And this is the private car annual mileage. And the source is SEAI. Now it's derived from the NCT test data. And it has also been verified by the CSO using a somewhat separate model. But effectively what we can see is that from 2000 through 2016, 17, there was no decline or no net decline in mileage by private cars. And this is the thing I was talking about earlier. With an expanding economy, you have population growth and you have per usage growth. And effectively, we're seeing this growth in overall mileage. And this was despite the fact that if we go to 2008, we had a very sharp economic downturn. Many people lost their jobs in that period. And yet, despite that, there was an almost negligible decline in annual mileage, which I find quite extraordinary. But if we look within the figures, here we have the petrol consumption. And there was a change in the taxation regime relating to private cars, which promoted diesel introduction, which happened at the same time as you had significant technical advances in the quality of diesel cars. So they, by the 2006, 2007, they pretty well matched the performance of petrol cars, which wasn't the case in the past. And we've seen petrol demand go continuously down. And indeed, this trend, despite changes and despite people getting concerned about emissions from diesel cars, this year, the first 2 months of the year, which are the only ones which are comparable with last year, petrol consumption was down a further 6%. So the move to diesel is increasing. But the extraordinary thing is, this continuous trend in increase in diesel consumption occurred despite the fact that diesel prices increased by 48% between 2009 and 2012 because of movements in international, the prices of the barrel of oil. What this is saying is that private car mileage is almost insensitive to the level of taxation imposed. Therefore, taxation per se is not going to reduce demand. If we go to the next slide. Residential fuel use. Again, if we look at energy use consumption per dwelling, permanently occupied and temperature corrected. And effectively, you're seeing a certain level of decline over the period here. And effectively, what we're looking at here is, the blue line is actually the uncorrected demand, and the red line is the temperature corrected demand. And okay, you have fossil fuel use and you have electricity use, which is virtually constant over the period. But again, despite the fact that gas oil and indeed kerosene prices increased by 65% between 2010 and 2012. And again, we had the height of an economic downturn. Many people lost their jobs. Many people, in fact, had extreme difficulty in being able to fund a fill of oil. It had very little impact. And you can see here at the bottom, it's tailing off. And if you extend that, it's going up again. And what happens is where the household disposable income reaches a certain level, energy demand goes up per household, despite advances that have been made in improved insulation, etc. So there is very little that price is going to do to demand. Now, if we look at the next slide, and this is very important because we're looking at the domestic energy price movements between 2013 and 2020. And you can see here, effectively, electricity prices went up by 21% in that period, a significant increase. But if we look on the oil side, kerosene, which is the dominant fuel used for heating homes in Ireland now, the price dropped by 50% because of changes in international markets. Now, historically, electricity prices tended to move broadly in line with fossil fuel prices, particularly oil and gas prices. But what we've seen in the period between 2013 and 2020 is almost a complete break in the link between the price of fossil fuels and the price of electricity. Fossil fuels declined by 50%, electricity went up by 20%. The net effect is the electricity kerosene price ratio, which was 1.73 in 2013, is now almost 4.5 times the cost per kilowatt hour. The implication of this, however, is important. Back in 2013, when the Irish Academy of Engineering recommended the installation of 300,000 heat pumps in rural houses, then using oil for its central heating, you could point out that you could reasonably assume that your annual energy cost was going to halve by the installation of the heat pump. Now, if you propose to somebody to install a heat pump, their energy costs are going to rise by 50%. Now, you know, people are concerned about the environment, etc. But to suggest that you're doing the right thing, you're going to spend, you know, the guts of £10,000 and you're going to increase your annual energy cost by 50%. That's not going to happen. So effectively, either you're going to have to get 100% subsidy and more than it on the prime cost of installing the heat pump, or you are going to have to increase the carbon taxes on liquid heating fuels by approximately 250%. Or sorry, you're going to have to introduce a carbon tax of approximately 250 euros a ton of CO2 on those fuels if you were to bring the price relativity back to where it was. Clearly, we talked earlier about the impact of introducing a carbon tax of somewhat over 100 euros a ton, but bringing in one at 250 euros a ton on the residential heating sector, and particularly the rural residential heating sector, is going to be challenging. So if we move on from there, we also, as well as looking at the economic side, we have to look at the labour force implications of, you know, what we need to do. Deep retrofits will require external insulation to effectively minimise disruption. But the wet trades are no longer attractive to apprentices. During the mid 2000 to 2010, we were able to attract a very large labour force from Eastern Europe to undertake construction work in Ireland. But because of changes that have happened in Eastern Europe since then, and indeed accommodation difficulties in various parts of the country here, those you know, an awful lot of those people have gone home. They're not going to come back. We're going to have to train apprentices if we want them to do this kind of thing. And at the moment, there's almost no uptake. Equally well, retrofitting rural heat pumps in rural Ireland, based on present practice, requires the attendance of several trades. So you're talking about electricians, plumbers, and maybe others. Now, getting all that together for a €10,000 project is extremely difficult and is a major barrier to actually implementing it. We would suggest an alternative to look at is the creation of a home energy technician who can do all the work required. But this is likely to face fierce opposition from the unions involved, because you're talking about somebody who does the electrics, does the plumbing, can do the control systems, and equally well can do a highly competent building energy rating analysis before the start of the project, because heat pump installation, to get it right and to get a satisfactory outcome, is not a trivial issue. It is technically quite challenging, and there have been quite a number of installations that have not met the requirements of the customer. So in conclusion, if we look at the issues, the EU's ETS national targets will ensure that reductions in the electricity sector and possibly the large industrial sectors are met, but at considerable cost. And that cost is the 21 billion we identified earlier in terms of capital expenditure, but it's also going to result in increasing the cost of electricity, because you saw the trend of what happened between 2013 and 2020. Electricity prices went up because of our investment in renewable energy. No cost-effective means of reducing emissions in the transport sector in Ireland have yet been identified, and shall we say, the government's aspiration to 100 or 1 million battery electric vehicles by 2030 has been, you know, challenged by many people, including the automotive sector. And movements in domestic energy prices now make electric heating unattractive. And labour force limitations will prevent residential targets being met. So effectively, we have an extremely challenging situation. Barry has set forward what is necessary, but we have to consider how it can be delivered. Thank you.
That's great. Thanks to Barry and Gerry for those presentations. Great level of detail there. We might get into our Q&A, and I think we have maybe one question in at this stage. So from Richard Morrison, Richard asks, says, great presentations. Question for Gerry, what is the cost of doing nothing to the Irish economy?
Put it this way, we haven't quantified it, but unfortunately, the population at large don't quantify it either. They look at what's the immediate problem. So effectively, while global warming was perceived as the issue 18 months ago, it's been superseded by COVID-19. So effectively, the population focus on the immediate, which is understandable in human terms, if wrong in longer term, societal terms.
Okay. We also have a question in from Declan Fitzmaurice to all panelists. Declan's from the Institute of Refrigeration of Ireland. Do the projections for carbon emissions and the carbon budget target include the effect of leakage of refrigerants?
Well, I suppose I'll go on that first. So to the best of my knowledge, but I'm open to correction if anybody else knows better, relevant gases relevant sources of leakage of those gases have to be assessed by the EPA. So they report on an annual basis at both EU and UN level on all greenhouse gases that are in the UN approved inventory. So I think the gases we're talking about here would be included in that. Now, assessing leakage can be difficult to detect or assess, and they probably, I imagine, use heuristic emission factors to estimate the levels of that, as opposed to measurements, the sort of thing. I mean, for carbon dioxide from fossil fuels, we have very reliable measurements of the amounts of those fuels in use. So we have very reliable estimates of the release of carbon dioxide from those sources. Something like leakage of refrigerants is more difficult to characterize and monitor. Again, as to the best of my knowledge, on the current inventory, relatively speaking, the contribution of those gases, and there are arguments about exactly how you compare the contributions of different gases, but in the current inventory, the overall contribution of those gases in the Irish case would be very modest. I'm not saying we should ignore them, but the big problem and the difficult problem is carbon dioxide, methane, and nitrous oxide. Those are the big three.
Can I say, based on work I did in judging the Sustainable Energy Ireland Energy Awards, we did come across companies, multinational companies, who were actually changing their refrigerant practices to move away from the very damaging gases you're talking about, and moving back, frankly, to ammonia. And effectively, while ammonia is not without its challenges, it doesn't present a problem in this area. Now, a significant factor is in the if you are seeking to introduce heat pumps on a very wide scale, you are talking about introducing a considerable amount of refrigerants into the domestic sector. And certainly some of the analysis undertaken by the Academy suggested that how you design your heat pump is particularly important, because you don't want to be getting into the refrigeration cycle in the field. You need to at least already have a skid-mounted refrigeration section that you can take back to the factory and maintain there to minimize the problems you're talking about, and also indeed to minimize the cost, because it's quite expensive to put refrigeration engineers into the field.
Very good. Next question, there's two in from Brian Cassidy. So excellent presentation, says Brian. The first question is, why worry about temperature rise when CO2 is the problem? The second question is, how do we get more young people interested in learning the wet trades? So who wants to take that?
So I get, Bernice, I'm not sure I quite caught that first question.
First one, why worry about temperature rise when CO2 is the problem?
Well, no, the problem is temperature rise. Well, now, okay, there are two coupled problems: temperature rise and ocean acidification that are both due to CO2 release, and they're both independently problematic, but they're coupled in that they're both triggered by the release of CO2. But if CO2 didn't have those negative effects, we wouldn't be worried. It's a trace gas in the atmosphere. It's not directly toxic to humans. It's colorless, it's tasteless. We breathe it in and out all the time. So we wouldn't be worried about CO2 if it wasn't for these planetary disruptions that it is now giving rise to. So the most pressing of those two, temperature rise and ocean acidification, is temperature rise, but they're both extremely concerning.
Can I say, in relation to attracting people into trades, etc., we two issues. One is we've had a disproportionate focus in this country, compared with, say, Germany, in third level education. And I mean third level at university or that type of level. And it's probably inappropriate to what we need. Now, having said that, you need to look at where people can earn. Income is important in terms of attracting people. There's no question about that. And I believe the proposal put forward there for a home energy technician, which would be quite a highly skilled person, has certain merit and certain attractions, because one of the benefits and one of the reasons plumbing and electricians are much easier to, or people are much more attracted to them for apprenticeships, is even if you have a downturn in the construction sector, you have a maintenance element there that keeps people, reasonably ticking over. the problem with the wet trades is they're very much related to new works. And therefore it is much harder to attract people into them because they've seen the brutal cycles that can occur in the construction sector. With a program, you know, a substantial program for deep retrofitting, you could argue that effectively you have a potentially guaranteed amount of work. But young people are reasonably skeptical of government promises. So, and particularly the mothers are. So effectively, there is a challenge in relation to the wet trades, and that will particularly affect external installation.
Okay, we will try to get to another 2 or 3 questions maybe before we finish up. So Dave Reddington asks, Gerry, do you expect energy costs to drop over the next few years to attach the installation of renewable energy products in the residential industry?
To attract, I think it means effectively and I mean, renewable energy products in the residential sector, we're talking particularly about electricity, be it for heating or indeed possibly for transport. And I see no indication that electricity prices are likely to fall. If you are to invest 21 billion in a sector and people are investing it to get a return, it is very hard to see, even with the projected rates of growth demand, how that is going to reduce prices. In relation to fossil fuel prices, quite a long time ago, I thought I could project fossil fuel prices. Shall we say, I've been chastened by experience. So effectively, it is very difficult to see where fossil fuel prices will go. But if you assume that demand is going to be under pressure for a variety of reasons, including the ones we're talking about, there is a significant amount of additional new low-cost resource becoming available, potentially. The United Arab Emirates announced very large-scale finds in recent times. So unfortunately, I think for the purposes of this discussion, fossil fuel prices at the moment look like staying low. And effectively, it will be up to governments to introduce a sufficiently high level of carbon tax to make electricity derived or renewable derived electricity attractive. But asking governments to introduce carbon taxes at 200 euros a tonne, the Swedes do it, but then the Swedes do various things somewhat different from the rest of the world. But trying to get rural TDs in Ireland to buy into it, I think would be a very significant challenge.
Okay, one from Kevin O'Rourke for either speaker to comment: if agriculture only reduces by 5 megatons of CO2 by 2030, then the annual reduction from the energy using sectors needs to be 10%.
I'm sure Kevin has done the sums correctly.
Yeah, I mean, there's no doubt that, you know, that there is a zero-sum element to all of this. So if you, for whatever reasons, decide that you're going to have less stringent reductions in one sector, then the zero-sum implication is that you have to go much steeper in some other sectors. Now, there is legitimate argument about how you do the sums, and that relates particularly to methane and you know, because it's a different gas with different characteristics and different properties in the way it contributes to global warming. It's not actually a trivial question, but I will say that it is possible to bring methane into an integrated cumulative carbon budget framework. And some recent work I've done with Paul Price, my DCU colleague for the EPA, we've actually demonstrated doing that on a, you know, giving example scenarios where you trade off action in cumulative budget terms between the energy sector and the agricultural sector, and correctly, or at least as best as we can, correctly reflecting the different characteristics of the gases. And the interesting thing is that, you know, in the sort of terms that Gerry's been talking about, what you get out of that is that if you don't commit to modest but significant reductions in methane. So we're talking about driving carbon dioxide to zero or negative. We don't need to do that with methane for various reasons. If we only reduced it by 50% over the next 30 years, that would drastically increase the time and scope to decarbonize energy systems. But conversely, if we don't decrease methane at all, or we actually allow methane emissions to increase over the next 30 years, then we would effectively committing that the energy system has to not only get rid of all its own emissions, but we have to get enough surplus emissions to start sucking large quantities of carbon dioxide back out of the atmosphere in order to make good the budget shortfall, the budget overshoot that we will have earned. So, you know, I'm trying to say two things. Yes, that there are tricky technicalities, but the technicalities just are there to make sure that you do the trade-off correctly. But it's still a trade-off, and there's no point in pretending otherwise.
I would just say, I would concur with Barry that methane is much more difficult to understand what's happening. And I think one of the areas that Ireland has fallen down on is we should have been doing, or should have had a lot more people involved at academic level looking at methane as a greenhouse gas. And I think people like ourselves, New Zealand, etc., and New Zealand have been raising this issue for some time, would need to cooperate, because there are technical issues involved in whether the potential impact of methane is being blanketed by water vapor or these kind of things. So methane is a gas where I believe Ireland should be spending a lot more money and academic resource looking at, because it is a very large element of our equation, and uniquely large almost, ourselves, New Zealand, and one or two other countries. So I think it is an area, given the financial implications of not looking at it, that it may not produce anything that is helpful, but it certainly, given the costs involved, we should certainly be pursuing it as an academic area.
Yeah, agreed. I think we could do a whole other event on methane, but maybe not for tonight. We've run about 10 minutes over, so I think we'll draw it to a close there. We do have a few questions that we haven't managed to get to. Sinead, I think what we'll try and do is ask the speakers to revert on those prior to sending publishing slides, maybe.
Yeah, that'd be great if they could just, I'll send the questions over to the speakers and they can include them in the slides.
Great, okay. Okay, well, it remains just to offer our thanks to Barry and Gerry for that really informative session and a really engaged and active Q&A to follow. It was a great event for everyone involved, I think. And again, the worst part in these webinars is they can't really feel the thanks, but I think you'll see in the comments there, everyone expressing their appreciation. So on behalf of the EECA division, just to say thanks to Barry and Gerry, and to wish everyone a happy and safe Christmas. We will be taking the month of January off, so we won't be back for an event in January, but we will be back in early February, and we'll have the details of that event online over the coming weeks.